Hello traders and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Here we have episode number 10, which is a crypto instrument, this time MATIC. Last week we went over a forex pair Euro GBP. Previously we went over a commodity and index. So as you can see, you can apply the same strategy and trading style on almost all markets. So now after 10 episodes, let me know if you like the content, the series, what you would like me to change, or anything you have in mind. I'll be checking the comments. So let's do it. As usual, I'll turn off my video to focus on the chart. For those who already know me from the previous episodes, like 9 episodes, I'll try to attach them in a section below called Related Ideas. We always start from the higher time frames, daily and weekly, which we call our rejection time frames, to know where we are in the market. Are we overall bullish, bearish, or stuck inside a range? And of course, half of the work is done here, because once we know where we are in the market, we can then zoom into lower time frames and look for setups around it. For example, of course, buy setups around the lower bound. It can be horizontal or non-horizontal, and sell setups around the upper bound. It can also be non-horizontal or horizontal. We've got three types of rejections. The first one is a typical support and resistance, where we have many failed attempts to break above or below a certain level or area. The second one is a non-horizontal support and resistance, also known as a trend line, a channel, a wedge, or whatever you want to call it, a rising rolling wedge, and so on. The third type is a supply and demand zone. So once we have an aggressive movement upward, that's a demand zone, and as price retests it, we'll be looking for buy setups. Vice versa, when we have an aggressive movement downward, that's a supply, and as price retests it, we'll be looking for sell setups. So let's do just that on MATIC and start by identifying our three types of rejections. Then we'll be zooming into lower time frames to look for setups. Let's start with our support and resistance. The way to do it is very simple. You draw a random line on your chart and drag and drop it in a way to connect as many swings as possible, preferably three swings. And yes, swings means two highs, one low, or one low, two highs. It doesn't have to be three highs and three lows. Okay, because I call it a support and resistance, not only a support. You've got the idea, right? And of course, we'll keep this one because it's around number 3 and almost around the all-time high, which is around 2.92. And for round numbers, we always check the price. For example, like if this one is trading between 1K, right, and like that 5K, then the round numbers would be 1K, 2K, 3K, and so on. But this one is trading between 0 and 3. So the strongest round numbers would be 1, 2, and 3. Of course, the minor ones would be around 1.5, 0.5, and 2.5. Anyway, let's focus on support and resistance first, and later on we'll check if it's a round number as well, which add more strength to a support and resistance. So we'll keep this one, and like now like most probably we'll find a rejection around 2.5, right? So let's like try it out as a cheat sheet. So here we go. Let's go for green. And as you clearly see, we've got many rejections from it. Previously a resistance, again broken upward, now support, broken downward, now resistance. Of course, it's an entire zone, okay? So there are three ways to do it. The first one is you keep it as a level, just like I do, but treat it as a zone to keep the chart clean. Or you draw multiple levels like this, like to cover the entire rejection area. Or you can simply go for the rectangle option, which you can find here on the fourth one, 1, 2, 3, 4. That's it, a rectangle, and here we go. Of course, you can also go for favorite, which you can see here, like as a quicker way to add it. So that's basically it. And for a resistance to be broken, we want an aggressive movement upwards. So like not only one candle, for example, this one isn't broken downward. We want an aggressive movement down, just like this. Now it's broken, and on the retest of it, we'll be looking for a sell. Of course, like here we go, price undershooted this level, while here overshooted this level. So it's not a lazy level. Always remember, it's an entire zone, just like this. Anyway, let's move forward And for now, let's go for blue because we've got green up there to keep it clean. If you go lower, I can't really see any rejections, like only one here, which is also the entire upper area. If you go a little bit lower, I can find one around this, which happens to be also at round number 2. So I'll keep it as is, as 2, but of course, it's an entire zone. So just like this, a resistance here, resistance multiple times, broken upward, support multiple times, broken downward, a resistance. So let's keep it as a level, and of course, like now as a cheat sheet, here we go, 1.5, right? So that's it. We can see multiple rejections from this area as an entire zone. Okay, sorry. Support, resistance again and again, support again and again until broken downward, resistance now, and so on. Of course, we've got the one, which is also a strong round number. Let's go for green for this one and go for the one. Here we go. We've got many rejections here. Support previously like a minor resistance. Support here, minor support broken downward, and now this one is acting as a resistance zone. Next, oops, let's re-add it. Next, let's go for blue for this one and go for green. Here we go. We've got one here, massive support and resistance, multiple rejections from it, and lately broken downward. So it's now acting as a resistance zone, and price happens to be now around it. Let's go for green for this one. Last but not least, we've got one down here, but it's not a support and resistance. Like now it is a support and resistance, multiple rejections, but previously we only had this, so it was a demand zone, and we can see it better from weekly time frame. Here we go. So a rally, a base, and then a rally. Okay, so that's a demand zone, vice versa, a drop, a base, and then a drop. That's a supply zone. But I will not draw it to keep it clean. And anyway, we already have the 1.5 support and resistance zone right here. So I will not draw like two rejections. Okay, but for this one, instead of going for a big zone like this, it doesn't look good on lower time frames. I also go for laser levels and as an entire zone. So 0.3, and here we go, 0.4, which is also around the 0.5 round number, which price respected previously, and so on. But anyway, let's keep it like this. So that's it. Look at how clean the chart is just by identifying our supply and resistance and supply and demand zones, right? So now we know where we are in the market around the resistance. Now obviously we'll be looking for a sell around the support, looking for a demand, and now support, looking for a buy. We were looking for buys here previously because we had a massive demand zone from lower time frames, sorry, from weekly, but on lower time frames we will be looking for buy stops. I'll show you when I zoom in a bit. And next, when we break above this one, we've got the next resistance, which would be here, as I showed you previously, and also round number 1. So that's basically it. Now let's go for our non-horizontal support and resistance. Okay, the way to do it is also we find an overall trend, like for example, just like a moving average, but like I'm personally not a fan of moving average. I would like to go for I would like to go for like trend lines. Okay, so for example, here we were in a bullish trend. Okay, so we could identify the overall flow, which obviously is bullish, and of course we connect the highs here. Here we go. So it will help us identify our overbought and oversold area. For example, here price is overbought around a non-horizontal resistance, and previously we were bullish, higher highs, higher lows. Here we go, higher highs, and price failed to make a higher high, instead made a lower high, which gave us an early alert that a potential reversal might happen. The bears took over here from a short-term perspective, breakout, retested it, a resistance, went downward, broke below the support, right, which we saw from weekly, and then now we are bearish. Okay, a classic retest to it, and now we are bearish. Okay, and then we previously were in an impulse correction, and so on, failed to make a higher low, and as I showed you, now we are bearish, right? So impulse, of course, the first one here, and then correction, impulse, low, low, correction, impulse, a big one. Inside we've got multiple impulse and correction movements, low, low, and then here we go, a low, low. Okay, anyway, we'll focus on the price action now in a bit, but I just like to give you an example. And we previously, here we go, we were in a bearish, we can see it better from h4, and it was like a wedge pattern, right, which is a bullish reversal one, broken upward, broke above the trend line here, but also above this major high, which I would like to see also above this resistance, and now support, break upward, a classic retest to it, and now we are bullish. Impulse correction, and here we go until this happens. So now we are bearish. We're applying the same logic that we applied here. Bearish reversal, bullish reversal. Now bearish, want to look for a reversal, right? So I want to look for a reversal. So how to do it? Like previously, I want to identify what's like a channel or anything that engulfing the overall movement downwards. So I can go for these highs, okay, or I can also go for this one, but it's already broken, or like price is currently sitting around it. So I want these two trend lines, okay. So because like of course like this one is more relevant because it's following the price action more, especially of this impulse correction and this impulse. But anyway, for extra confirmation, I like to keep everything that might hold it back. Okay. So anyway, like I would add it in a bit, but for now, let's keep it clean. Here we go. That's in brown. And let's make an offset for it. Let's see if it's a channel or a wedge. Yeah, that's most probably a channel or a wedge. Or anyway, it doesn't really matter like what it is, as long as you identify the lower bound. It's again and again an entire zone, just like support resistance, and not a laser level. So just to make us or to help us feel where we are in the market and the overall direction. Okay, so that's basically I want to make it appear on lower time frames, and fantastic. Okay, so that's it. We're now bearish, trading inside this big movement. From a market structure perspective, we know that the bears are exhausted because they couldn't make a low. Okay, just like previously, couldn't make a low, made a higher low. Okay, it's just an early alert. I'll show you an example about this for now. Okay, so but let's keep it. So now we are bearish, right? So lower lows, lower highs. Every bullish movement would be a correction before the next bearish impulse movement starts. A correction before the next bearish impulse movement starts. Okay, like now I'll show you when the bulls would take over. For the bulls to take over, just like previously as I showed you here, I want a major swing high to be broken upwards, and it happens to be around the zero point 0.7 resistance zone. Okay, that's why you see my alert here. Anyway, I don't know if you can see it like from this live, from this video. Okay, so I would like to see this. In this case, it would break what? The trend line, and also it would break this trend line if you break above the one, which is lining up with the one resistance. But I will not draw it to keep the chart clean, but you've got the idea. So this is the last major high. It will also be a break above the zero point 0.7 resistance, a trend line here engulfing the movement downward, acting as an horizontal resistance. So by breaking above it, the bulls would break every possible scenario or every possible rejection that might hold it down. Meanwhile, and until we see an aggressive break above it, just like I showed you previously, an aggressive break upward, then and only then we can say that the bulls are taking over, and on the retest of it, we'll be looking for buy setups. Because just like previously, broke below the previous low, the trend line and so on, rejected the next support, traded higher, we looked for a sell. The exact opposite. Okay, a resistance broke above it, now broken, retested it, and we looked for a buy. So we're looking for the same exact thing, looking for this break, reject the one and this trend line now. Okay, in this case, we'll be looking for buy setups on the retest to catch what the next impulse movement up, and we'll keep holding our buy. Of course, if you trade it on spot, okay, keep taking our buy until a reversal happens and so on. But let's take it step by step anyway for now. Okay, okay, so this is basically it from a long-term perspective. That's what I'm waiting for this break. Meanwhile, we can still have this movement for price to form a new swing high. In this case, it would be a valid trend line or channel. In this case, a third swing would be expected. It might be an equal low, a double bottom. It might be a low. Okay, it might be a higher low. We can't really know for now, but I want this swing to form and then a break above it. Okay, and in this case, it would be even better. These are the two possible scenarios I'm looking for on MATIC: an immediate break, rejection, look for a buy here, or price go down, look for a buy from a short-term perspective, and then look for a buy from a long-term perspective. So I can add half here, and then, for example, half here. Okay. Anyway, it doesn't really matter. Like for now, I'm not focused on risk management. I'm focusing on the price action, on how to analyze any chart from scratch. Okay, and know what you are looking for. The example I wanted to show you here is that yes, sorry, the bears are exhausted. They couldn't make a lower low, instead made a higher low. Okay, but it's only an early alert, a signal that we might have a reversal. For the bulls to take over, for the reversal to be confirmed, to have a shift in momentum, we need to see a break above the previous high, which the exact same thing happened here. Price failed to make a lower low, instead made a higher low, but it's just a correction. Okay, it didn't break above the last major high, which by break I mean an aggressive break, or like at least a big candle close, just like previously here, a big candle close, previously here low, big candle close. Didn't happen, only wicks rejecting it before we trade lower and form the next impulse movement downwards. Okay, so this is like why I want to give you this example. Now, while looking for what from a shorter term perspective, while looking for setups. So if, as I mentioned, we could look for buy here, a head and shoulders broken upward for those who traded on margin can enter a buy here, stop loss below, like right shoulder or head. It depends on how conservative you are. Or if you'd like, also you can wait for a retest of it and look for a buy here after the structure is broken upward. Here we go. Okay. Anyway, let's focus on the current price action. We are currently inside this big range. Okay, the bears took over here, break classically that's traded lower, break classically that's traded low, traded higher, and now we are bullish. Okay, now we can also draw what? A channel which is engulfing. Sorry about that. I wanted to catch the tip of it. Here we go. Okay, so make an offset for it to be a channel. That's it. Okay, so now for the bears to take over, okay, to start the next impulse movement downward, which is this one. Impulse, correction, impulse. Now we're at this correction. We want the next impulse movement to start, which might result in a lower low equal low, as I showed you from a daily. Okay, I would like to see this a break below it. In this case, for trade margin can look for a sell. I like to target this next demand zone, which would be starting from zero point 0.4. Okay, so this is basically it, and like this would signal the start of the second scenario, which I showed you from daily. The first scenario is this break. Look for a buy on the retest end, which would be the intersection of the red trend line, brown trend line, zero point 0.7, and so on, and previous highs. Or the second scenario would be a one more impulse movement. In this case, we'll be looking for the sell. Then we're looking for this buy. Then here we go. The buys would take over. Okay, and of course you can even zoom in lower and lower, like depends on like what type of trader you are. The bears took over here, the bulls took over here to start the impulse, and now for the bears to take over to start the correction. Here we go, we zoom in. That's it. That's a minor low. This one for extra confirmation. And if we have this break, then we will start what? Simply a correction inside this big channel, inside this big brown channel. Okay, so if you break it lower, we're expecting this movement, and then maybe we'll break above this to in the favor of the first scenario from daily, or we might go lower, form this one, and then break it downward. In this case, it would be the second scenario. Okay, so this is basically it for MATIC on how to analyze any chart from scratch. Let me add it here to analyze any chart. Here we go, from scratch. If you have any questions, let me know in the comments, and I would be happy to help. And as mentioned, since like it's like episode 10, let me know if you like the series, if you would like me to change anything, and I would be happy to do it. So today we've got episode number 10. Let's go for red for this one, and I don't actually like this blue, so let's go for this one here. Okay, and best of luck everyone, and I'll see you hopefully next week on episode number 11.